Well, Eric, we are going to turn things over to you without further delay on this $13.5 billion deal.
And Deirdre, you know what I'm going to do first? I'm going to clarify a point I just made. I'm here at BlackRock headquarters. They're in Midtown Manhattan. Of course, I am with the two men who put the deal together that we've been talking about all morning. Larry Fink, the CEO and chairman of BlackRock, and Bob Diamond, the chief executive officer of Barclays Capital. Gentlemen, thanks so much for being here. I think it makes sense to start off with you, Larry, because you're the acquirer here. Bob, we're going to have lots of time for conversation, and I want you to jump in with whatever thought you have to say. But, Larry, this is an enormous deal, $13.5 billion. It creates a company, as we've been saying, with $2.7 trillion in assets under management. It's hard to get one's head around an amount of money that large. And it's for that reason that I have this first question. Does size matter? Is it really better, to be that much bigger in this business?
I don't think size matters. I don't think it's... we did not do this for a size reason. I'm not particularly interested in whether we were $2 trillion or $1 trillion or $3 trillion or more. We did this for our clients. We believe the combination of these two firms, that they are so complementary in terms of the products that we're going to be able to offer to our clients, retail and institutionally, a more a larger and more important approach in terms of products. So we're going to be able to bring products from the passive side to the quantitative side to the active side. And we're going to be able to do this in a comprehensive way. So we're going to be able to deliver more complex solutions to our clients. In the retail side, we have an ability to bring our mutual fund family and now the iShares family together and provide different solutions for our clients. And so I think what this brings together is an organization that provides more services to our clients, and it provides a more comprehensiveness in all the products.
Okay, I want to come back and talk to you a bit more about what it does mean for your clients in just a second. In the meantime, I do want to turn to Bob and ask a question. Bob, you've been saying, and your colleagues at Barclays have been saying for months, that you would do whatever it takes to remain not just competitive with all of the other banks in the midst of this tremendously difficult market, but would do whatever it takes to keep your firm operating without government assistance. You'd sell assets if necessary. You would raise capital if necessary. Why now?
This is strategic. This isn't about capital, Eric. When we made the decision to look at selling our iShares business, we had made the decision then that the iShares business, because of the distribution channel, the retail distribution, that in the long run, Barclays was probably not the right owner. A bank was probably not the right owner. And that timing of that sale had a lot to do with our October decisions in terms of capital and raising equity from the Middle East, as you recall. This is very strategic. This was not the intention when we put iShares up for sale. Our intention during this turmoil at Barclays was really twofold. How can we manage through this crisis, this turmoil, profitably? And we've done that through 2007 and 2008. But more importantly, when we come out of this period, how can we look at each of our businesses, Barclays Capital, Barclays Wealth, and Barclays Global Investors, and have them in an even better strategic position? For BarCap and for Barclays Wealth, the Lehman acquisition accomplished that. We faced a very different situation with BGI, which is with the acquisition of Lehman, we now have a great big investment bank here in the U.S. and a great big equities business. BGI is the largest manager of institutional equities in the world. And the related party issues, the ERISA rules, the 40 Act rules, were preventing the business flows between Barclays Capital and BGI. That was an issue for BarCap, which is now resolved, but it was also an issue for BGI to cut off the institutional quality of the equity business of the combined Lehman and Barclays Capital wasn't beneficial to the clients, it wasn't beneficial to the staff, it wasn't beneficial to the shareholders of BGI.
So is that the best explanation for those Barclays shareholders who say you're selling off the family jewels, who say it's been a great business, it's been a growth business? You say there's other reasons, strategic considerations that perhaps you're not factoring in.
And our shareholders understand that. We bought this business in 1995 for $450 million. And we're selling it today for $13.5 billion. So it was a great financial transaction over the years. And BGI is a great business, and so great that we're maintaining 19.9% in the combined group. But at 19.9%, we still resolve a lot of the regulatory issues around related parties. The fact that John Varley and I are going on the board should give you confidence of how much we want to be a part of the synergies of this business. We want to support Larry, Rob Capito, and their management teams. We're in this for the long run.
Larry, you talked about the benefit to clients. Are there economies of scale here that may, say, make it cheaper for people to invest in your funds?
Excuse me, there's no question there's going to be some economies of scale. That was not the main purpose of this transaction. There's so many transactions that people think about as a big cost takeout. This transaction was not designed for cost takeouts. It was designed for delivering more products, as I said earlier. It was designed to have that complex solution for our clients. So having the ability to deliver all those products plus our risk management solutions puts us in a different spot versus any investment manager. So there is no question that scale can bring down costs. And if we can bring down costs to our clients, we certainly will do that. But that was not the prime motivation of finding a cost takeout transaction in which our shareholders are benefited, but I'm not sure if our clients are benefiting from that. And so this is why it's important. And if you look at how we did our other transactions, we never designed a transaction in which it's a cost takeout deal.
All right. Larry, hang on 1 second. Bob, we'll be back in just 2 minutes' time. Folks, we're taking a short break right here on Bloomberg, talking to Larry Fink of BlackRock, Bob Diamond of Barclays Capital. They put together a blockbuster deal. We're talking about it. We'll be back in 2 minutes' time.
Are you paying more than $1.70 a month for phone service? Then you need MagicJack for just $19.95 a year. $19.95 a year. We are now adding over 250,000 new customers a month because we give you free local and long distance, your own phone number, voicemail, and directory assistance. Replace your phone company or add a second line with MagicJack for just $19.95 a year. Get MagicJack at Walmart.
As a trader, my major concerns are cost, access to product, and the stability of my broker. Interactive Brokers is my choice because of its superior price execution, ultra-low commissions, global direct market access, and financial strength. If you are an individual or institutional trader with the same concerns, visit interactivebrokers.com to learn more. Interactive Brokers, stocks, options, futures, forex, bonds, worldwide from one account.
Until we can move a ton of goods using no fuel, we've got the next best thing. CSX trains can move a ton of goods 436 miles on 1 gallon of fuel. CSX, how tomorrow moves.
Are you paying more than $1.70 a month for phone service? Then you need MagicJack for just $19.95 a year. $19.95 a year. We are now adding over 250,000 new customers a month because we give you free local and long distance, your own phone number, voicemail, and directory assistance. Replace your phone company or add a second line with MagicJack for just $19.95 a year. Get MagicJack at Best Buy.
U.S. equity index futures are indicating a lower open after yesterday's gains. The S&P 500 is on track to close higher for the week, though, and it is at its best level for the year. Take a look right now at Treasuries. They are also gaining up for a second day, yields reaching 4% on the 10-year yesterday, encouraging some to come back in and buy. The dollar rising against most of its trading partners. The Wall Street Journal says the Fed will hold off on increasing bond purchases. We are going to take you now, as promised, back to BlackRock headquarters. BlackRock, as we have been reporting all morning, buying Barclays Global Investors for $13.5 billion in a first on Bloomberg. We rejoin Eric Schatzker with his two guests. Eric.
Thank you very much, Deirdre. I'm here with Larry Fink, the CEO and chairman of BlackRock, and Bob Diamond, the CEO of Barclays Capital. They're the guys who put this deal together, the best to talk to if we want to get more insights on why it's happening. And Bob, I have a question for you here. Obviously, Barclays continues. It's an enormous company. What are you going to do with the $6.6 billion in cash that you're getting from BlackRock?
You know, it's, as you mentioned, a transaction like this it gives us a lot of comfort. Our core equity ratio now over 8% puts us in a good position. We haven't made any announcements about how we're going to invest that money, but I think John and I and the board feel we're in an opportunity-rich environment. So, you know, having deeper capital ratios right now is a good thing, and we're in no rush to do anything.
I realize you haven't made any announcements yet. That's why you're here. But speaking of the investments that you're thinking about making, are you going to use some of that money, do you expect, to expand in the banking businesses in which you remain, particularly investment banking?
You know, we've talked about the Barclays Group and the balance between our investment banking and wealth businesses on one hand and our global retail and commercial banking businesses on the other. The consolidation in the investment banking industry has been dramatic. If you go back just 3 years, Eric, the top 5 firms in investment banking got about 20 to 25% of the revenue. In the first quarter of this year, it's over 40%. Our ambition is to be in the top 3 global investment banks. We think with the acquisition of the Lehman Brothers business, where we have all the opportunities to be there and are operating at that level right now, there's great opportunities over the next couple of years as the markets continue to recover to continue to invest in our wealth business and our investment banking business. Absolutely.
Larry, a question for you. As you know, as an investor, any sensible investor looks both at the benefits of a potential transaction but also at the risks. The question for you is this: how are you going to manage the risks that people might see in this transaction, the risks to clients, for example, that you might lose some business because some of your clients invest with both Barclays, BGI rather, and BlackRock? Some of them may feel that they aren't getting enough diversification any longer. And the other risk, they call it diseconomy of scale risk. You're going to have a very large company. It's going to be difficult to take stakes in different funds in any number of companies without, at the very least, prompting a disclosure requirement.
Those are really good questions, and those are issues that we thoroughly thought of. So these questions are not a surprise because we've been debating these issues now over the course of our analysis of this transaction. You're correct in saying there is going to be dyssynergies. There is going to be client concentration issues. And so we are anticipating some of those client concentration issues. But our clients have been talking to us about this because there was no mystery that this might happen, and the enthusiasm that we receive from our clients have been spectacular. Clients are looking for this organization to provide them with more information, more products on a consistent basis. We are seeing a consolidation in our investment management business. The world is looking for fewer managers. So I think the trend of consolidation in the investment management business has just begun. I think there will be many large multi-trillion-dollar firms. I think we're seeing from clients they're looking to use fewer and fewer investment management companies because they're looking for a more concentrated, more cost-effective solution. And so having that scale, our clients are looking to us to provide that solution. And in terms of our scale, in terms of equities, there are many ways of going around that in terms of voting patterns, in terms of voting on behalf of the shareholders. There's other ways of separating the divisions in terms of trying to attain some form of separation to have two entities voting. And so we don't think we are going to have a big issue in terms of reporting issues and concentration issues with our scale and equities.
And I have a quick question for you. We're going to have to take a break, but I do want to come back briefly on the other side of that. To what degree does this reflect your view of the market? How are things going to evolve that will benefit BlackRock? We'll start with about 30 seconds and come back if we have to.
Thank you. Oh, I can say it now?
Keep going.
So,
you know what? Here. We'll ask that question on the other side of the break because I want to give you a full opportunity to answer and ask Bob as well. We are talking with Larry Fink, the CEO of BlackRock, Bob Diamond, the CEO of Barclays Capital, about that transaction to create a firm with $2.7 trillion in assets. Stay tuned right here on Bloomberg. Back in 2 minutes.
more than $1.70 a month for phone service? Then you need MagicJack for just $19.95 a year. $19.95 a year. We are now adding over 250,000 new customers a month because we give you free local and long distance, your own phone number, voicemail, and directory assistance. Replace your phone company or add a second line with MagicJack for just $19.95 a year. Get MagicJack at Radio Shack.
Your online life is your life, and life moves fast. That's why you need the speed of Norton Antivirus Classic. Now only $14.99. Installs faster, boots faster, scans faster. It's the fastest security anywhere. Order now and get the award-winning Norton Antivirus Classic for only $14.99. You'll be protected while you upload, download, check your balance, or proceed to checkout. Fast. Norton Antivirus Classic. Just $14.99 through this limited time TV offer. That's just pennies a day. Call or click today.
3 days only at Joseph A. Bank. Buy any sport coat, dress pants, or sportswear and get 2 for free. Just buy 1, get 2 free. That's all sport coats, dress pants, and sportswear. Buy 1, get 2 free. Mix and match. Buy 1, get 2 free. That's any 2. Absolutely free. Friday, Saturday, Sunday at Joseph A. Bank.
For serious traders, reliable information and professional level tools are the keys to success. That's why you need eSignal. Tens of thousands of traders just like you trust our rock-solid data and advanced trading tools. eSignal lets you easily identify which stocks to trade, analyze them in real time, and trade with confidence with your choice of broker. Get serious about trading. Get eSignal.
Call today for your risk-free 30-day trial and ask about free trading strategies to get you started. Call 1-800-500-1323.
We're back now with Larry Fink, CEO of BlackRock, and Bob Diamond, CEO of Barclays Capital, talking about the transaction where BlackRock is buying Barclays Global Investors. Larry, I was asking you before the break, what does this say about your view of the market? These are uncertain times. Give us a roadmap as to what we should expect ahead.
I think it's fair to say that Armageddon is behind us. I think we entered this year with tremendous fear, uncertainty, and investors at that time with that fear and uncertainty were very happy in earning zero in money market funds or in short-term treasuries. As the stimulus packages from the economy, as we saw lower interest rates earlier in this year, as we had the Federal Reserve acquiring many assets to stabilize the financial system, and as a stress test proceeded with banks raising over $100 billion of capitals, and on top of that, REITs raised capital. Many financial services companies raised capital. So we're at a point now where there's a much greater stability, and people are now starting to ask, maybe I can earn more than zero. And so we're starting to see clients starting to move out in terms of investing in credit. We've seen a huge rally in credit, and we've seen a restabilization in equities.
But do you expect that to continue? Obviously, treasuries are weak, but credit is strong, spreads narrowing there. Do you expect that the credit markets to get more and more stable, prices to keep rising, and similarly with equities, given the correlation that exists there?
Well, prices are not rallying terribly in credit right now. They're just not changing where treasuries are declining, and so it's the opposite way of spread tightening, and so we don't expect it to continue. We think the market needs a breather in the equity markets and in the credit markets. We've come a long ways in 12 weeks, but the overall trend, we believe, is more positive. Bob Dahl, our CIO in equities, believes that we've seen the bottom. We believe we are in the midst of a recovery in our economies, albeit a slow one. And so we're not forecasting a jubilant economy. We're not forecasting an economy that is back to normal. It's more a new normal.
I've got to ask Bob, do the markets need to take a breather, Bob?
You know, I think the opportunities are very good. I think, as Larry said, Armageddon is off the table. The financial system is being repaired. There's more to go. The economy will be a long-term recovery. But here's the issue. I think it's true for investment management and investment banking. Relationships have never been more important. They're far more strategic than they've ever been, whether it's our corporate clients, our institutional clients, pension funds. They're being much more selective about who they're doing business with. And in a consolidating business, that's benefiting us.
Excellent. Bob Diamond, Larry Fink.